Yeah, 2023 was a nice rebound from a difficult 2022. As it relates to last year, from a sector allocation perspective, consumer staples, which we were underweight, was one of the largest positive contributors to our relative performance, followed by zero weight within energy and utilities. Both sectors struggled in the year. From a stock selection perspective, our picks within healthcare, as they related to pharmaceuticals and drug distributors, were the best performing sector relative to the benchmark, followed by consumer discretionary, where some of our e-commerce and luxury names perform well, and information technology, which was a mix of semiconductors, enterprise software, and cloud computing names that all perform quite strongly. 2023 was really defined by a fairly narrow set of leadership, the Mag 7 being the highlighted group that really performed very admirably in the year. Our portfolio was able to outperform despite only owning three. We do own NVIDIA, which is a business that went from being a video game oriented name to the lion's share winner within artificial intelligence. We think this is a business that will be described as sort of winner take most for the foreseeable future, and will be playing a pivotal role in all things AI in the years to come. The second of the three we own is Microsoft. This is a business we love based on the strong install base from the Microsoft Office suite. But we added it to the portfolio in 2022 based on its leading position within cloud computing. Certainly a long runway and strong tailwind in the future for cloud computing across a wide range of industries. Similarly, we own Amazon, which also has a strong install base in terms of its dominance within Amazon Web Services, but it also is an emerging leader in the cloud computing space, and we think will be participating in that tailwind and runway that Microsoft is on as well. As always, we have a concentrated portfolio. At the end of 2023, we were 34 securities. However, those securities do provide a very diversified exposure to the traditional growth sectors and geographies broadly across the globe. We are usually overweight areas like industrials, healthcare, and technology. Usually very much underweight real estate, utilities, the classic sort of non-growth sectors of the market. That's been very consistent whether we have had tailwinds and significant outperformance or in years where we have struggled and met headwinds. It's the way we prefer to position the portfolio for the long-term view. As it relates to geographies, China has been sort of slowly de-emphasized in the portfolio, and currently we have a zero weight in that country by domicile. For now, we do think that will be an opportunity set in the future, but for now, the geopolitical environment and the softness of the economy make it a little less attractive than other areas in the world to be in our very concentrated portfolio. But just be confident that when we get periods of volatility, we tend to get excited about those areas as we are able to add very high quality growth businesses into the portfolio when the markets have them out of favor. I mentioned some of the upgrading that we tend to do in volatile periods. One of those upgrades in recent quarters was AstraZeneca. This is a business that we've tracked over a very long time. They are in the pharmaceutical side of the healthcare industry. We noticed a culture shift at the business from a traditional sort of marketing business that many pharma businesses are to being one that is focused on research and development. That research and development in recent years has borne significant fruit. They had been a leader in the oncology area of the market, so cancer drugs, and that R&D has brought forward 4 or 5 blockbuster drugs that have no competitors, and there's no visibility towards any generics or patent cliffs in the near future. So this is a business that is in an advantageous space in the market, can grow its competitive advantage, and is supported by a committed culture to research and development. A second holding that exhibits these characteristics would be Arista Networks. This is a business that makes routers and switches for computing. You can think of Cisco Systems as one of its major competitors. Something WCM loves in businesses is when you can get an aggressive operator in a sleepy industry. We see Arista Networks taking market share from Cisco as they have a culture of aggressive salespeople, not in a negative fashion, much more in the way that they love to win. And so when you are going against somewhat of a sleepy incumbent in Cisco, a more hungry sales force with a really strong competitive advantage and offering to the marketplace, we think can continue to take share in the quarters and years to come.